are the chances of a country having to actually exit the Eurozone? Billionaire George Soros thinks, quote, probably inevitable. In a panel discussion in Vienna, the man who broke the Bank of England urged European policymakers to come up with a plan B and recognize the need for change at a critical juncture for the common currency. Joining us now to continue the conversation is Ryan Gibbons, managing partner at GPS Capital Markets, and also with us our guest host out of London, Richard Irwin. Ryan, great to see you this morning. And we talk obviously a lot about the concerns out of Greece reflecting on our own fiscal state in the United States. What is the relationship there? Because it almost seems like a crumb compared to a loaf of bread.
Yeah, it really is. It's a mere blip in the little pebble in the ocean, if you will. But if Greece defaults, then it's going to start off maybe I wouldn't call it a tsunami, but it'd be a pretty good-sized wave that will hit the financial markets.
And hit the euro.
It would definitely hit the euro. Flight to safety would happen in a hurry. We've been holding above 141 here today. I think that we could easily retrace below 140. The 138.80 mark comes into play in a big hurry.
Why, though, do you think the dollar has also held so firm in the midst of the Greek drama as it unfolds?
A couple of reasons. I think that Greece, generally speaking, is a very small player for the United States. But when you look at a flight to safety, whenever there's going to be a flight to safety, you're always going to see the dollar strengthen and become the currency of choice.
Who has a question for
you? Well, I'm just thinking, why even bother with the euro at the moment, Ryan? Why bother with the euro? Why bother with the yen, for that matter, or for pound sterling as well? Why not go with some of the safe haven flows that we're seeing and go for the Swissy, or go for the Norwegian kroner, or go for the Swedish kroner?
Well, it becomes a matter of business. Anytime you have parties on either side of the ocean doing business back and forth, you're going to have to do business in those currencies and in those marketplaces. Just basically speaking, you have to look at the euro-dollar as a currency pair and recognize the deal flow that runs through that pair. And you can go safe haven to a degree and go to the Swissy, which has done a great job this year and continues to be, you know, in my opinion, all-time highs and very strong. But to the degree that there isn't commerce moving back and forth in those countries, you're going to need to move to the countries where there is commerce.
Richard, I mean, you look at the Swissy against the euro, for an example, and you see the Swissy is higher by something like 8% over the last month alone. I mean, it's a huge move, and this indicates, again, do we believe in the euro? I was going to say we don't believe in the euro, but do we? I mean...
Well, it's interesting. If you go back only a few weeks, the euro had actually been one of the stronger currencies in the world, and it was a strong currency because the ECB was really alone in coming out with the rhetoric concerning rising interest rates, and the market bought that for a period of 3 to 6 months, and we saw the euro go from 120 against the dollar to 147. Now, I think quite rightly at the moment the focus is very much on European sovereign debt issues. If we get to the stage where over the next couple of weeks the Greek Parliament votes through the packages, another tranche is released, I mean, this clearly does not solve the European sovereign debt crisis, but it may provide some sort of pause where some of the other macro factors which were important a few weeks ago and since have become unimportant, they can potentially come back into play.
Well, certainly it doesn't solve the debt crisis. In that scenario, how do corporations deal with the market volatility? What are the strategies that you would suggest for more of a sound hedge?
Yeah, it's a real good question, Nicole. The important thing is that the companies stay focused in what they do. Make sure that they understand where the implications of risk are and where the volatility lies in their own individual procurements and where they're selling, and to make sure that they have a hedging program in place that allows them to take advantage of the situations and remain with as much corporate risk as they're willing to accept.
And just really quickly, we have to let you go. What are some of your favorites?
boy, I think that, you know, that what we do at GPS is make sure that we put strategies together that help companies individually. So that's a long answer that we probably don't have time for today.
Okay,
but I'd be more than happy to talk next time.
Absolutely. GPS, that's where you can navigate through all sorts of choppy waters. So Ryan Gibbons, managing partner there. We appreciate your time this morning. Thank you so much, Ryan. Our guest host, Richard, sticks around for the rest of the hour. And coming up next, by the end of this week, we'll actually know apparently a lot more about the health of the U.S. consumer.